Hello and welcome to The Urban. I'm Marjorie Paillon. Coming up, you do know by heart WeWork or Airbnb, but have you heard about Compas, VTS, Opendoor, or Homelink? They are the next big thing, and they're standing under one tech label, PropTech. Property technology is coming and aims at disrupting the real estate market. It improves the way we buy, rent, sell, design, construct, or even manage residential and commercial property. The swelling market has attracted venture capitalists who invested a record $12 billion in new startups globally in 2017. So in this episode, we're about to focus on the facts, figures, and trends which are shaping the PropTech universe. With our amazing guests here in studio, Thibaut Onsely, Executive Director, Investments and Developments at Gecina, and Stéphane Villecroze, Co-founder and Managing Partner of Demeter. Good morning to you, gentlemen.
Hi, everyone. Morning.
Stay put, if you may, since we're about to dive in these questions in a few minutes. But first, what exactly investors want from those startups? And do entrepreneurs have what it takes to enter the real estate battle? Back to the basics. With one of the most prominent funds in the neighborhood, Fifth Wall Ventures is rocking investment globally from its LA headquarters. Its co-founder and managing partner, Brendan Wallace, joins us now. Hi, Brendan. Great to have you on The Urban.
Thank you so much for having me on.
So, the whole nature of how you expand into brick and mortar is going to change. I'm quoting you here. More than the way we do business, does the sector need a mindset reboot?
Absolutely. I think, one of the interesting dynamics of the real estate industry in general is this contrast between the size and scale of the industry. I mean, real estate is the largest industry in the U.S. and the world. It's roughly 13% of U.S. GDP. But miraculously, it's actually one of the lowest spenders on IT and technology and has been for a while. And I think there's kind of a prevailing mindset amongst real estate owner, operator, developers that have been successful that they really haven't had to cultivate a point of view on technology and really what tenants want, what they need from a cost savings, from a development standpoint, and how they can actually leverage new technologies to improve their core business. They just haven't needed to do that. And what I think has started to change is that a handful of very large, very institutional real estate owner-operators are starting to adopt technology, and it's paying very significant strategic dividends for them. And now the rest of the industry is following suit. So I think the mindset change is afoot right now. And I think you're only going to see more of it over the next few years.
Speaking of the devil, from VR to AR to blockchain and drones, every piece of tech seems to be part of this game. Which technology exactly should we keep an eye on when it comes to PropTech?
It's an interesting question. I mean, VR and drones and kind of what I would almost call frontier technologies do represent, I think, a lot of... They're really attractive to real estate owners because they have a wow factor to them. And there's no doubt that they can actually be highly strategic. But actually, I think where we've seen some of the best traction amongst our portfolio is, frankly, in companies that are a bit more core to operations. So I think one of our most successful investments out of our fund is VTS, which is leasing and asset management software. And so it's really not quite as, I would say, sexy as drones or VR, but it's kind of bringing the real estate industry into cloud-based enterprise software in a way that it really hasn't for decades. And so I think there's both an opportunity to really disrupt real estate with some of these truly frontier technologies, but actually the kind of closer to home, more operationally intensive, true enterprise softwares represent a really interesting opportunities for companies both in the U.S. and internationally.
All that glitters, right?
Yes, exactly. There's opportunity in the glitter, but there's opportunity in kind of the less sexy, kind of slightly duller, but frankly more operationally heavy, but strategically valuable technologies that have emerged.
So speaking of sexiness, what do you expect from those PropTech startups, and which factors do draw your attention as an investor?
One of the things we look for as kind of the most active investor in the space is kind of this hybrid mindset of being both really disruptive and wanting to kind of push the envelope and push real estate owners to do more and adopt more and capture more data and be innovative. But also, and this is in the minds of entrepreneurs, but also kind of balance that and almost temper that with a practicality of it's really hard to drive change management and drive technology adoption in large real estate companies. And so we're obviously looking for exceptional technologies that can be really valuable to their customers. But I think equally as important, we're looking for a mindset in the entrepreneur where they can really balance those two extremes of being both extremely innovative, but also extremely pragmatic in understanding what it takes to sell into large real estate owner-operators that have maybe never adopted technology before and prove value to them. And frankly, that is what Fifth Wall aims to do, is kind of support these entrepreneurs in making that case to these large real estate owner-operator developers that have invested in our fund. We try to be that connective tissue to help them make that leap.
So I was stating the fact earlier that this market has attracted a lot of VC with the record investment of $12 billion globally in 2017. Are there too many cooks in the kitchen?
It's a good question. I think it's obvious that real estate tech has exploded. And I think we've talked about the reasons for that. But I think at the same time, what you're seeing is an interesting dynamic in the industry where because real estate as an industry has underinvested in technology for so long, I mean, really, we're talking like 2 decades. The real estate industry has more or less missed all of internet and all of mobile. And so in just like the last 36 months has begun to rapidly adopt technology. So that creates this virtual gold rush of new companies that have emerged to solve inefficiencies and pain points in the real estate industry. However, there's nonetheless a lot of risk in those early stage companies in the sense that what we've seen is that success for an early stage real estate technology company is highly dependent on the adoption decisions of very few, very large real estate owner operators. So if you can find a way to sell, if you're, say, a hospitality technology, and you can find a way to sell into Marriott or Host Hotels or Hilton, it's very likely that with even one of those contracts, you're going to be successful. However, if you fail to, it's almost certain death. And so there is this kind of interesting dynamic, which we define as like king-making, that takes place in the industry. And the flip side of that is that these large real estate owner-operator developers in the US and globally increasingly want to adopt new technologies, but can't really discern which are the good technologies and which are the not so good technologies. And that's actually why we built Fifth Wall, is really to be a bridge or a conduit between those two ecosystems. So our model was from the beginning that we would engage with large real estate owner-operator developers like Gecina, understand their pain points, understand the inefficiencies, understand where they're looking to adopt technology, and then distill down from everything in the real estate tech ecosystem, which are the most relevant companies, and try to drive adoption or partnership or distribution deals that we think can help accelerate those companies. So what's really hard, and I think what a lot of venture investors miss, certainly the generalist VCs that have been actively investing in real estate tech, is that without real estate relationships and without real estate domain expertise and without the ability to really influence the outcome of these early stage companies, it's kind of wildcatting. And so our model from the beginning was very much based on we're not going to speculate. We're actually going to truly understand and build intimate relationships with our strategic investors, these large real estate owner-operator developers throughout the US and the world, and then connect them to the best companies so we can actually de-risk the companies we're investing in through our investor relationships.
So let's take these companies and startups to the next level, scale-ups. Every tech sectors and countries are craving for unicorns, those companies with $1 billion valuation. PropTech has its own. You've stated VTS, for instance. Don't you fear a valuation bubble at some point?
Yeah, I think absolutely. It's a legitimate concern that valuations have become, I think, throughout tech, not just in real estate tech, but generally quite inflated. I think what you are seeing, which I would say is kind of the counterpoint to that, is that the exits and the outcomes that are being achieved now in the public markets are quite dramatic. So the pace at which enterprise value is being created in all of technology and real estate technology specifically is unlike anything before in the venture or technology ecosystem. With that said, I think there is nonetheless there's probably a little too much hype right now within real estate tech. And I think where some of that comes from is that you have a lot of unsophisticated corporate investors that are trying to do venture themselves at times. And when they invest, oftentimes they're less valuation sensitive. And yet because they're large, oftentimes public companies, the amount of capital they can deploy is quite significant. So they can actually move the market themselves, in some cases unintentionally. So I do think it is a time of lofty or heady valuations, so to speak. But you are still seeing a lot of really interesting companies that have come out of this cohort and are actually creating a lot of value for their customers.
And finally, tech giants also want to grab a bite of this cake, challenging property companies on their own field. Is it a wake-up call for the entire sector to move forward?
Absolutely. I think the line between, there's this interesting dynamic where the line between a real estate company, what has heretofore been defined as a real estate owner or operator, is really changing. I think real estate owners conceptualize themselves as we're in the business of commercializing or monetizing space, right? We kind of sell space to different use cases, retail, multifamily, office. But the line between that business and a technology business or even an operating business is starting to blur. And I think you really look no further than WeWork, right? Which is kind of an operating company, but really for the most part doesn't own any real estate itself or owns very little, but yet is now encroaching on and challenging incumbent real estate office owners and office REITs. And in the same way, I think Airbnb, right, doesn't own a single asset. It's simply a platform to connect owners of apartments and short-term rental units to customers directly. And in so doing, they've disintermediated the relationships that many hotel owner-operators have had with their customers. So I think this notion that real estate is an industry that is immune to disruption because of how asset-heavy it is and because of how capital-intensive it is frankly somewhat of a false confidence, and that real estate owners really need to look to the frontiers of innovation to understand what disruption is coming from my sector and how can I be proactive in understanding the threats, but also potentially addressing them through technology adoption.
Brendan Wallace from Fifth Wall, thank you so much for stopping by The Urban.
Thank you so much for having me on. It was a pleasure to talk.
And now back to studio to dive in this question with Thibault Ansley, the Executive Director, Investments and Developments at Gecina, and Stéphane Villecroze, still co-founder and managing partner of Demeter. A question in reaction with you, Thibault, though, on Fifth Wall. Gecina will invest $20 million in Brendan's fund. Why are you making that move?
Well, this investment will enhance Gecina's ability to identify and target on a very wide scale, actually, innovative partners and technological solutions that will enable us to further strengthen our strategy's relevance over the long term, while accelerating as well our technological and service-driven transformation. That's the main goal of this investment, I would say. On top of that, we will also benefit from Fifth Wall expertise to deploy and basically adopt new technologies and methods to serve our 100,000 customers under the label You First, that we will talk about a bit later, I guess. And actually, this goal is for our innovation policy to combine immediate operational benefits with an acceleration of our team's learning curve and long-term support for our own transformation. And if you think about that a minute, real estate as a sector has somehow only recently discovered the revolutions of the internet and the mobile, as Brendan mentioned a bit earlier. And if you think about real estate in French, it literally translates as not mobile, which is not so far actually from reluctant to change. And the whole idea of being involved with Fifth Wall is to benefit also from their team, to be, as a company, I would say, Gecina as a whole, more mobile.
Well, something which is definitely changing is climate. And Stéphane, Gecina is investing 5 million euros in the Paris Fonds Vert, the Paris Green Fund, that Demeter is actually managing.
Yeah, so a few words on the context and on Paris Green Fund. So it's a fund dedicated not to startups, but to SMEs. So already existing companies with revenue with proven solutions, fast growing usually, but anyway, which brings innovation in their growth. And Gecina is one of our investors, one of the partners of this fund, not only because it targets solutions for Paris metropolitan area, but also for large cities, globally speaking, because I guess today all large cities in the world will face the same challenges related to urbanization, to climate change, to how could we live and work properly in the future in those cities.
And I guess Demeter is not only about investing in greener technologies or SMEs. How would you define the Demeter type of touch?
So I will bounce on Brendan Wallace's interview because I think there are many great points in what he described. And as you say, we invest in startups, but also in SMEs and also in infrastructure, so in project financing. And I would say not only things are happening currently on the venture scene, but also on the much later stage, including SMEs, including projects. And it's a great move for us to see from nascent startups to much probably less wow effect, as he said, projects which are much later stage. But we also invest on this change in the property owners and developers, operators, if we refer to PropTech, which have a day-to-day business to manage and not bet only on wow effect innovations for 10 years or 20 years time for some of them.
So guys, PropTech is definitely a hot buzzword type of thing here, but what does it actually mean to you? How would you define it now in 2019? Thibaut, maybe first.
Well, for me, basically, PropTech means pure technological innovation applied to real estate, basically. But for Gecina, it's pretty simple. Innovating in real estate means designing smarter and better buildings that will serve the needs of our customers on a daily basis, be it an office property or a residential one. So that's basically how I would define PropTech applied to Gecina.
Stéphane, what is your synonym for PropTech?
Yeah, I would say, so Demeter is investing in all topics related to climate change and environment. And of course, smart city is a significant part of these sectors. And PropTech is, of course, a key cornerstone of smart city. How do we live and work in those cities in the future? And of course, related to buildings, it means residential usage, but also service buildings. And so there are a great diversity of type of solutions, innovations, and a challenge to cope with.
And how would you size the market, though? How big is it? Sky's the limit?
I think it's a huge market, and I don't want to insist too much on the buzzwords because there are some drawbacks when you get too visible regarding the sector or the attraction for the investors and for the corporates. But obviously, real estate is a huge market, and it's quite a new market, or the time to market has never been so active and so close, in fact, for many new solutions, either developed by startups or by SMEs. So it's really a time to look at this scene.
Thibaut?
Yeah, definitely PropTech was not a topic of discussions a few years back. So it's something pretty new, and the feeling that it completely exploded. If you think at Vivatech earlier this month, there was full of property-related startups. Actually, I would say that maybe sky is the limit, but in such a case, I am the sky. I mean, the human resources at the end of the day will be the limit to that expansion if we do not take into account the capacity of the employees, of the clients, of our partners to embrace and adopt all those innovations.
So we will definitely refer to Thibaut from now by the sky, though. So actually, where do you see opportunities coming up in 2019 or even 2020, though? What major trends are you closely following?
Well, the real estate industry is clearly undergoing deep change, shaken by the evolution of our society and the impact of digital technology. Uses are evolving at unprecedented speed. And in this context, I think it would be of interest to share with you the result of a study we just have carried out with a set of partners that we gathered in a think tank. They are made of several real estate companies in Europe, both Astria, Coima, Colonial, ourselves, Gecina, and Great Portland Estates and NSI. And we conducted the first pan-European studies on the evolution of workplaces from the perspective of users. We interviewed 140 different persons in several countries all over Europe, both millennials and non-millennials. And do you want to know one of the major lessons of this study?
We absolutely do want to know more of this.
Well, actually, a millennial thinks like me, like you, and we are not as young as millennials. So that's a first key learning for us. There is a general consensus, basically, that age of groups have different vision. That's what we all believe. But the result of this study shows that it is not true. Basically, the study reveals that whatever the age, whatever the regions and the work sectors of the people we interviewed, basically they have the same expectations regarding the workplace by 2030. And there are 5 main themes that they converge on. First, today's users are connected and they expect tomorrow's offices to be smart. Second, they are mobile and they expect tomorrow's offices to be more flex. They want to feel at home everywhere and expect tomorrow's offices to be sweet. And they no longer have 2 parallel and siloed lives, and they expect tomorrow's offices to be service-oriented. And last but not least, today's users are more aware of environmental issues, and they expect tomorrow's offices to be green. So if you think about it, smart, flex, sweet, service-oriented, and green, this is both the expectations for the future offices, but also for the city as a whole.
Yeah, absolutely, which definitely matches the idea that the lines are getting more and more blurred between private and professional life, Stefan, right?
Yeah, correct. I almost feel a millennial after what Thibault says.
But you are.
Of course, technology is a strong driver, and digitalization, artificial intelligence, data management, mapping are new topics on mobile phones, of course, which elicit many new applications, are a key difference compared to what with the sector experience only a few years ago, in fact. But beyond the technologies, I think what we expect from a building to live in or to work in has evolved recently, and I'm glad to learn it's not only for the younger persons, but I think we expect something else from the place in which we live. On the other hand, climate change, again, has many implications for living in cities, not only for buildings, of course, but among others, buildings. Elevation in temperatures, for just to quote one example, is a key challenge. And so we want to live in comfortable buildings in the future, whatever the temperature. And this implies new solutions and probably new specifications for the buildings in which we will acquire or rent some space to work and live.
Green used to be good. Now everyone's going green. Why is PropTech a powerful tool to address climate issues?
Just to make the transition, the energetic renovation of buildings is, at the scale we see it nowadays, is really a new topic. For us, the tipping point was only a few years ago, less than 5 years ago. So the time to market for innovative solutions for this type of energetic renovation has come now, even for startups, of course, but also for existing SMEs. And we see some guys which were on this field for years, but which experience incredible growth rates for the last 2, 3, or 4 or 5 years.
And Thibault, you definitely mentioned the climate awareness in the study earlier. How can we make PropTech greener?
Yeah, sure. Coming back to our investment in Demeter, clearly this is a way to make the investment greener, I would say, since there is a clear focus on sustainable innovation with Demeter and with companies that are at a different stage of development compared to Fifth Wall. So here they have enough track record on the solutions they have implemented in the past so that we are sure that they have a positive impact on climate and our environmental context. So this is of importance, and we are already working with some of the companies that Demeter is investing on, and we deploy their solutions that have proven to be very efficient either on the energy saving front, for example.
So now customer experience has proven to be key for the digital economy, and real estate technology gets it too, of course. How do you build a seamless or suitable user or customer experience with real estate technologies?
So basically, we initiated the You First level at the level of Gecina, for instance. And the idea of the creation of our service and relationship-oriented brand, You First, is that we want to adopt basically a very centralized mindset about serving the needs of our customer and be fully customer-centric. The idea is, of course, to put the client at the heart of everything we do. And we want to make our 100,000 customers the focus of our full attention and give them the highest quality of service possible, both in our offices and residential units.
Stéphane, is user experience dedicated to PropTech?
Sure. And I guess in this sector, as in other sectors, user experience is really the key driver. User experience will make your company grow and profitably and reach a broader customer base. As an investors, we would prefer B2B to B2C business models, but nevertheless, we count on our partners, including Gecina as an investor, for example, to better understand the expectations of their own customers, which can be, of course, companies, which can be individuals. But finally, their user experience will be the success of Gecina on their pairs, and also the success of the companies which could sell services or solutions to this environment.
And speaking of user experience, of course, one company who actually gets this is definitely WeWork. We're diving into the WeWork example with Brendan earlier ago, but they refuse actually to be called a real estate company. They rather go by the name of community company. What's your take on this label position?
Well, WeWork is in fact a really new approach to real estate. If you think about it, a while ago, I would say, but not so far ago, when we were building a property, an office, for instance, the main focus was on the lobby, the main entrance, and the floors of the top management. And clearly, WeWork completely revolutionized the way of thinking about a property, because for a few years ago, the rest didn't really matter. And now the focus of attention is about every single square meter in a property that is having the full attention of the developers, the builders, and property-related company like ourselves. Even the staircases become a very area of attention.
Stéphane?
Yeah, probably there is a part of marketing in this choice, and of course it's a buzzword, but nevertheless, real estate is managing communities, and it has been for decades, not to say centuries, because people live together, and you have to run this or make this community live in harmony. But it's still a buzzword, because we also heard of managing communities in energy startups or companies. It's a plus when you raise funds or when you market your company. But again, I think it really applies to real estate better than many other sectors.
And probably another buzzword or form of storytelling are definitely unicorns right now. I know, Stéphane, you're craving for this question. Are we also on the verge of a valuation bubble?
So this was mentioned by Brendan Wallace, because I think all investors and all players in the globally speaking have to face this reality nowadays. So of course there are many funds which want to invest in a very promising sector. So one of the risks is to pay too much for business plans or for good entrepreneurs. So a unicorn, as we all know, does not exist. And so I would really differentiate unicorns, which are companies raising money with supposed valuation in the range of 1 billion, but valuation does mean nothing when you have investors. There are some preferred shares, you have some waterfalls, so it's just marketing again. The only unicorn that we can refer to is cash unicorn, when you sell a company and when you did realize significant investments and with good returns, and you sold it above 1 billion, for example. But that is a real trigger to reality.
Thibaut, do you feel like mortar and bricks companies have to fear the unicorn zoo?
Well, I don't think it is a fear that we should have, for sure. There is a lot of things to be inspired from these future big companies, because I share the point of view of Stéphane. From the moment you are not going to the market, you don't really know if the valuation is fair. And the recent IPOs of some unicorn demonstrated that it's not obvious that the valuation is a fair one. So there is no fear to have on that front. There is a lot to learn. And as we try to do with Fifth Wall and Demeter to partner with.
No fairy tales here on The Urban, but real answers. Thank you so much, gentlemen, for your perspective. Thank you, Thibaut. Thank you, Stéphane.
Thank you, Marjorie.
And that's all we have time for today. But you can catch up the other episodes and take a listen to the French version of The Urban with Marie Misset on the best podcast platforms. Stay connected and see you next on The Urban.